Assalamualaikum warahmatullahi wabarakatuh. Good morning, good afternoon, good day, good evening. Anytime you watch these videos, I have to use English because I have two classes in this intermediate financial accounting one. One is English class or international class. One is in the regular class. I hope that students from regular class can enjoy this video, can follow this material. If I have time, I will make subtitles for Indonesian students to learn this video. Okay. For the English class, this is my first video for you because I was assigned just this morning to be in this class since Bu Rita's class was too big for a normal class, so that the class must be split it into two classes. So this is our first meeting, and I hope that you will enjoy this meeting until the end of the semester. Then the journey will be long, but I hope that you can enjoy this journey. Okay, let's. Okay. We are here in this chapter 4 of intermediate accounting book written by Kiso, Wagan, and Warfield. This is the third edition of IFRS edition. Today we will discuss income statement and related information. Last week you may have studied about financial reporting and conceptual framework. The conceptual framework will be discussed more on accounting theory class. So we are here now at chapter 4. Let me open my book here. Okay, the learning objectives, there are 5 learning objectives today. First, after studying this, it is expected that you will be able to first identify the uses and limitation of an income statement. And then the second one is to describe the content and the format of income statement. I will give you example of real income statement so that you can study it later. And then discuss how to report various income items. Then the fourth, explain the reporting and accounting changes and errors. This learning objectives number 4 will be covered later in intermediate financial accounting. The second, it will be on chapter 22. So we will skip this. Maybe we will discuss a little bit about this, and we will skip this. And then the 5 is to describe related equity statements. So let's start with the preview of chapter 4. This is the first one is income statement, and then the content of it, and items of the income statement, and then accounting changes and errors, and related equity statements. So, what is the usefulness of an income statement? There are 3 usefulness of this statement. The first one is to evaluate past performance of a company. If you look at an income statement, you will be presented with 2 comparative numbers. For example, if you look at an income statement of 2019, you will also be given the income statement of 2018, or could be with 2017. So by looking at an income statement, first one, you can evaluate past performance of a certain company. And then the usefulness of this income statement or this statement is for you to predict the future performance of a company. By looking at the components of an income statement, you will be able to have time series of data. For example, you have 10 years of income statement, for example, for a company called ABC Company, for example. And by having those numbers of 10 consecutive years numbers, it will help you to predict future performance of this company. And then the third one, an income statement will help you to assess risk or uncertainty of how the company to achieve future cash flows of that company. So in the first video, you can check my video on my channel. It is stated that I explained there that one of the purpose of not actually an income statement alone, but also but it is all financial reports, is to help investor or creditors to predict the future cash flows of a company and the ability of that company to generate cash flows. So income statement can help us to assess the ability or the probability of a company to generate future cash flows. But income statement has some limitation. First one, the company must omit or must delete or must not include something that cannot be measured reliably. What are the examples that we cannot measure reliably or validly or correctly? For example, here in this example is brand value. In Indonesia, for example, the brand value of, let's say, Gudang Garam is high, or Gojek is high. The brand value of Gojek is high, but you cannot include brand value of Gojek into the income statement. You cannot add the brand value of, for example, GNE or GNA in Indonesian into its income statement, because you cannot measure the brand value. You cannot measure, for example, workers, your labors, your technology competitive advantage. You cannot add its value into income statement, because what? Because you can measure it reliably. Second one is that income numbers are affected by accounting methods that you use. For example, to depreciate fixed assets, we have some methods. For example, straight lines or double declining balance or sum of years digit. Two companies with different depreciation method can result or will result with different income numbers. So if I say that my company is better than your company because my income is higher than yours income, it could be false. My claim will be or could be false if I use method that allow me to recognize higher income or higher profits, since I use different method than yours, your financial or income statement. So methods used or employed can change your income numbers. And then income's measurement, it also involves judgment. We use judgment. For example, I have a truck. The truck that this truck will be used for example, delivering product to customers. The question is, how long will the truck live or operate? Is it 5 years? Is it 10 years? Or is it 7.5 years? Whatever the number that you choose, it is based on your judgment. Since it is based on your judgment, again with the same with pointer number 2, you will come to different income numbers. So the issue will be whether your earnings numbers are a quality number. Since you can manage your income, or you can manipulate your income. To manage income is a negative or has negative meaning. It means you can manipulate your income numbers to meet earnings target, or to make earnings look less risky than it should be. So there is an issue of quality of earnings number. And then we come to the content and the format of an income statement. I will not. Okay. First, the element is income. The second one, the element of income statement. First one is income. It is the inflows or enhancement of assets, and it could be, this is the definition of income. It is the inflows or enhancements of asset or decrease of liabilities. The result of an income will be reflected in equity. So I hope that you remember how the income statement and the statement of financial position are articulated each other. The income that you report in income statement, or the net income, will go into the equity. So it means it is what I mean by articulation. Later we will come back to this idea. And income, they have both revenues and gains. What are the revenues? It comes from ordinary activities of a company. If it is trading companies, so the revenue will come from tradings. But gains are something that may or not may arise from ordinary activities. So it could come from something that the company never expect to happen. For example, gains from the sale of long-term assets. You have truck. I said I have truck for delivering products to customers. I don't expect since the beginning of the acquisition of the assets that this truck will be sold. So if I sell the truck higher than its fair value, I can claim some gains. This gain comes from the sale of the long-term asset. It belongs to gain accounts, or it may raise from non-ordinary activities. Let's say it is from extraordinary activities or not from regular activities. The example is from gains from tradings of securities. Let me give you an example. For example, I bought some gold in 2015, for example. 1 grams of gold was around, let's say, 500,000 rupees. So I bought a kilos of gold. It equals to, let's say, 500 million rupees. And today, the market price of gold per grams, it equals to 1 million rupees per gram. So by holding that gold, I can say that I am 5 million rupees richer than I was in 2015. If I have to make to prepare an income statement today, I can say that I have gained from holding a kilograms of gold. So I can claim it, but it is not realized yet. So I can claim some gains from unrealized gain of holding some gold. And second one, the elements of income statement are expenses. What are the expenses? It is it defines as decreases in economic benefit during the accounting period in the form of outflows or depletion of assets or incurrence of liabilities. So it could be from usage of your assets, so it is expense, or the incurrence of liabilities. Your liabilities increase. So if your liabilities increase, it means that you have expenses. For example, like this. Let us see number one, outflows or depletion of assets. For example, I have a cash of 1 million rupees. So it is on my as my assets, and then I bought for example a kilogram of fruits. For example, orange. It costs let's say 100,000 rupees of orange. So if I need to journal the transaction or the purchase of that orange, I will put in debit as orange, expense dash purchase of orange 100,000 rupees, and the credit is cash. So it is the credit as cash. It means that the asset is depleted. It decreased. So it is what we call here, or the example of depletion of asset, or could be incurrence of a liability, or the increase of liability. For example, I want to buy let's say I rent some assets for the office, but I said to the owner, the landlord, that I will pay it at the end of the month. So when I rent it, I debit the expense rent, let's say 1 million rupees, and I credit liabilities dash rent liability, for example, of 1 million. So it is what we call the increase of liabilities. That result in the decrease of equity. It is clear there. So those are the elements of income statement. Later we will see them all. Let us move fast. There are expenses, then there are losses. What are the losses? Losses are, for example, from restructuring charges and losses on to the sale of long-term asset. So we may have some gain from sale of our assets when we may have loss from our sales of or our assets. What are the expenses? Started from cost of goods sold, depreciation, interest, rent, salary, and wages, and also taxes and other expenses. This is the income statement. I will show you later. Be patient. So the first one is sales, and then minus cost of goods sold. We produce gross profit, and then deducted with selling expenses, administrative and or general expenses, and other income expenses. We come to income from operation minus financing costs. We come to income before income tax, and then deducted with income tax. We come to income from continuing operation, and so on. So we until we have here earnings per share. Okay, this is the example of, this is a real company, I believe, that the book use. This is the condensed income statement. Condensed, it means the short version of income statement. We call it short because yes, it is short, and then it should be. And then we reporting in gross profit. What are the gross profit? So here we have gross profit here. Gross profit is it comes from the deduction of sales or revenue with the cost of goods sold. So it is computed by deducting cost of goods sold from net sales. Let's see here, we have gross profit here, net sales minus cost of goods sold, it equals to gross profit. Okay, we jump into income from operation. This is the definition of income from operation. Okay, we will see later. And then expense classification could be based on its nature and could be based on its function. If it is based on its nature, it could be cost of material use, direct labor incurred, delivery expenses, advertising expenses, employee benefit, depreciation, and amortization. And then based on the function could be cost of goods sold, selling expenses, and administrative expenses. Both classification are in our standards. This is the example of illustration of a company, how they come into the income statement based on its nature. Okay, so this is cost of service, selling expenses, administrative expenses. It is by nature of expenses approach, and this is by function of expenses approach. You can see later in this video. And then we come to income from operation. There is also gains and loss. IASB, and I believe that Indonesian Standard Board also have the same position with IASB, International Accounting Standard Board, takes the position that both revenue and expenses and other income expenses should be reported as part of income from operation. And then what about disclosure? You need to disclose additional items so that your financial report users will take some benefit of those information. So those are the examples. Those are the additional information that you may find in our financial report. Okay, then in net income, it represents the income after all revenues and expenses has been reported or considered. And then earnings per share, it is the formula that you deduct net income with preferred dividends divided by weighted average of ordinary shares outstanding. This formula seems easy, but the calculation actually needs some extra effort. This is the example. I will be fast on this. And then discontinued operation. This is the component of entity that either it has been disposed or has been classified as held for sale and represent major lines of business or could be in the form of line of business or geographical area of operation, or could be a single or co-coordinated plan to dispose of a major line of business or geographical area operation. So the company needs to report discontinued operation as mentioned here. This is the example. Okay. So for example here we have KC Products as a company decides to discontinue its electric division. During the current year, the electric division lost 300,000 pounds sterling net of tax. KC sold the division at the end of the year at a loss of 500,000 net of tax. So this is the income from continuing operation, and then minus loss from operation of that division from discontinued division, discontinued operation, and loss on disposal. So there are two losses here. First from its operation, this electronic division, and then second one is from disposal of that operation. So here we have total loss of 800. So the net income is 19,000 to 100,000 pounds sterling. This is how it is represented. And then there are also intra-period tax allocation. Income tax is allocated to income from continuing operation and discontinued operation. I believe this one will be discussed more on taxation course and accounting for taxation course. Okay, we skip this. Okay, and then reporting other statement here is allocation to non-controlling interest. When a company prepares a consolidated income statement, the International Financial Reporting Standards requires that company then an income be allocated to the controlling or non-controlling interest. This allocation is reported at the bottom of the income statement after net income. So here, for example, the net income is 100,064,000. It is divided into how much is attributable to shareholders of Bokhong, name of the shareholder, and what are the portion of non-controlling interest of those numbers. Okay, This is the example or the presentation of the income statement. Okay. This is the summary. Okay, let me show you. I have here two companies. First one is it is called Indopharma. It is a company, a drug company. I 348. I will show you the name of the company. The name of the company is Indopharma. It is a state-owned enterprise. It is a drug company, the company that produces medicine. So come to page 348. Here there is an independent auditor's report. I hope that you can see this number, this report. So this is the income, the auditor's report. Later you will need to study this. Okay, this is the consolidated statement of financial position. We will skip this because it is not our subject today. We come to here to the consolidated statement of profit or loss and other comprehensive income for the year ended of December 31, 2018 and 2017. So we are presented here with two comparatives income statement. So you can here look at this side. Indonesian class can see this side, and international class should see this right side. Here we have net sales of 1.6 trillion rupees, and it has sorry, this is 2017. Okay, whatever the number, let's say we have to 1.3 trillion rupees of cost of goods sold. Net sales deducted with cost of goods sold, it equals to gross profit of 280 billion rupees. Okay, and then the gross profit deducted with selling expenses, general and administrative expenses, and other incomes expense, and we have operating profit and loss. Then deducted with finance expenses and share or profit or loss from associate, and then we have loss before tax. See here, the company did not report gains or profit, but it reports loss. So what you see here is there is loss before tax. And then here, then it is deducted more with benefits of income taxes. And then it is current tax expense of 475 million rupees and deferred tax benefit. Later you will see what deferred tax is about. And we have here the tax or expense benefit and the loss for the year. Then you can see there are some other expenses here until we come to other comprehensive income or loss for the year after the tax. And then again total comprehensive loss for the years attributable to whom? To owners of the parent and the controlling interest. And then we have also here information on total comprehensive loss attributable to owners and non-controlling interest. I present you another income statement from Bumi Resources. It is a good company, a big company. it used instead of Indonesian rupiahs, it used US dollar. See here, we have revenues, we have cost of revenues. Could be they did not use cost of goods sold, but cost of revenues. It is pretty much the same. Then gross profit minus operating expenses, we have operating income or operating loss, because in 2018 it reported gain, but in 2017 it reported loss. Okay, then other incomes or other expenses, here they have expenses here. See here, I highlight this. This is gain. Okay, I highlight this. This is what we talked about earlier, that there is gain here. So you can see gain of revaluation of assets. So you can find that there is a gain reported in this statement. And then impairment of assets also deducted. And then we have here income before income tax, and then income tax expense net, and then income for the year, other, and then also other comprehensive incomes. There are some numbers reported here, and the total of comprehensive income for the year, and income attributable to owners of the parent or entity. There is controlling owners and to non-controlling owners. So this is the EPS, earnings per share or income per share, basic and diluted. Okay, we come back to this chapter. I hope that you, I will try to give you this, provide you with this income account annual report of Bumi Resources and Indofarma later on the island. Okay, we come to accounting errors and changes. Accounting changes and errors. During our operation, we can change our accounting principle or our accounting method. And if we change, some adjustment must be made, and it could be retrospective in nature. It means we may change the previous years affected by our accounting principle changes. So the cumulative effect resulted from the changes should be adjusted into our beginning return earnings. As I said earlier, that we skip this or discuss this part fast, because it will be covered in chapter 22. So those are the examples of changes of accounting principle. For example, you change from FIFO to average cost, or you change from percentage of completion to the completed contract method for income recognition. This is the example of changes in accounting principle. I will not discuss on this. And then change in accounting estimate. For example, you change useful lives of your assets. For example, I have a truck. I estimated that this truck will be economically used for let's say 15 years, but after use that asset, that truck for let's say 10 years, I realized that the economic value of this truck should not be 15 years, but 18 years. So instead of depreciate it with the other remaining 5 years, I will depreciate the truck with the remaining new estimation of another 8 years. So this is the example of changes in of accounting estimates. Could be also the estimate of uncollectible receivable. For example, I have some receivables with my customers. Let's say I predict that or estimate that some 2 or let's say 7% of my receivable will not be collected at all. So I need to make some allowance for uncollectible or bad debt expenses of receivable. But during the operation of the company, I change it into, let's say, only 3% of that receivable should be allocated as allowance. So it is the example of changes of accounting estimates. Or could be, for example, here the inventory obsolescence. The amount of the inventory that will be broken, will be rotten, or else. Okay. This is the example. You can find it in the book. I will provide you with this slides later, also in the island. And also correction of errors, accounting errors will be covered also in chapter 22. So we will not talk about it deeply here. So this is the summary of accounting errors and changes of accounting estimates. And the last one, statement related to equity. There are statements in annual report or in the financial reporting that relates to equities. The first one is retained earnings statement. Retained earnings statement will increase then when by the net income or by the change in accounting principle or by prior period adjustment. This prior period adjustment examples was provided earlier from the change of accounting estimates. This one is the change in accounting estimate. It could be from other adjustment that must be used retrospectively, and could the decrease comes from the net loss, comes from dividend payments or change in accounting principle, could be, or prior period adjustment. Same with this increase. This is the example, the balance Choi Limited statement of return earnings as of December 31, 2019. The balance on January 1, 2019 was 1.0500,000, and then the net incomes was 360,000, dividends paid 300,000, so the balance is 1.110 million. I will show you real income, real statement later. Okay. So some restriction on return earnings, if there are restriction on return earnings, should be disclosed in notes to the financial statement and as appropriated returns earnings if there are. Okay. So the second one that related to equity statement is comprehensive income. What are the comprehensive incomes mean? Comprehensive incomes mean that all changes in equity during our period of reporting, except those resulting from investment and or by owners on distribution to owners, are comprehensive income. It includes all the gains, all the revenues, expenses, and loss that has been reported in net income, and all gain and loss that bypass net income but affect the equity. So, in introductory accounting, you were told that you need to finish first income statement before you can finish or prepare statement of financial position. So it means that you need to calculate, you need to determine, you need to estimate first the income or net profit number, and that number, that net profit number, will be transferred into statement of equity. But in reality, not all the income that must pass the income statement so that they can come to the equity side of the statement of financial position. This is what pointer number 2 means, that some gains or some loss may bypass net income, but it affects the equity. So it goes directly to the equity. It bypasses net income. So it is included in comprehensive income. This is the presentation you can find in the accounting standards. If you say if you have or you check the accounting standards, especially Indonesian accounting standard, there are two ways of presenting comprehensive income. First one is a single continuous statement, or two separate but consecutive statements. This is the example. If I'm not mistaken, we have the annual report that I present to you use only single statement form. And then a statement of changes in equity itself. It is required by the accounting standard. In addition to a statement of comprehensive income, it comprises of share capital, ordinary. Okay, I will show you what are the number that are presented there. Okay, this is the end of the slides. I will show you here. So here we have income statement of Bumi Resources. Income statement here you can see consolidated statement of profit and loss and other comprehensive income. So here, after we have come to the number of income for the year, so it is the income from operation, there are more to report here, that it is called other comprehensive income. So the form of this report is single form, because we don't have separate report for it. Here the other comprehensive income are comprised of two items that will not be reclassified to profit and loss, and sorry, only one. There are those are items that will not be reclassified to profit and loss. The first one is what is it? This one, share in other comprehensive income of associates and joint ventures. So it deduct in the company's net income for the year. And then there are benefits from, there are gains from remeasurement of post-employment benefit liabilities. So that add on income for the year, and then related income tax. So we have here net of those numbers are 3.3 million US dollar. So we have here a net of other comprehensive income or loss. Yeah, this is income, this is loss in 2017. So the total comprehensive income for the year was this number. Okay, some attributable to parties. So we have here, this is, you can see here, I will show you. This is statement of changes in equity. So when you look at this report, you better try to study this report at least once in this course. You can see here the items here. There are the toppest one is the balance of December 2016, because it is 2017 and 2018. And then what could increase, what caused the increase of stocks, sorry, the equity increased because the increase in capital stock. And then there are differences between assets and liability of tax amnesty and so on. So we have the balance of 2017. The balance of December 31, 2017 will be used as the starting point to calculate the balance of December 31, 2018. We'll repeat again. So here, okay, this is our topic for next week. So this is it. That's all. I hope that you can use this video as accompanying information for you or explanation for you during your study of this book. So good luck with it. Assalamualaikum warahmatullahi wabarakatuh.